In terms of specific themes in today's market, I'll start by broadening out that question. What generally tends to create an attractive opportunity? And that's usually when there is a void of capital, or when an asset class or a type of investment suddenly goes from being very popular to being very unpopular. In the run-up to the current cycle that we are in, there was a merger boom, there was a private equity boom, and there was a private credit boom. And that led to companies being taken private at historically high multiples. As we now are in a world where demand is softening, costs remain high, squeezing margins for companies, in the capital markets environment we're in, some of those acquisition multiples now appear to have been too high. And so this whole landscape of companies that had been taken private over the last several years are now really available to credit market investors to be able to earn what were originally returns that looked like the equity returns on these acquisitions, now by being senior lenders in those same companies. So everyone seems to be waiting or watching for the extreme dislocation that may come during this cycle. And it seems to be the case to us that the event which triggers the forced selling, or the financing arrangement that triggered the forced selling, is something that the market didn't spend much time thinking about beforehand and really only learns about afterwards. And that's how I would characterize the UK pension schemes with the gilt-related leverage problem. That margin call led to the disposition of billions of dollars of assets, which did create some very attractive investment opportunities. Another theme we're seeing in the market is providing capital to tech companies that have lost access to the easy capital that had been so available to them over the last several years. That equity capital has vanished quite significantly. The companies themselves are now left with the most attractive alternative to the companies, largely being debt capital. The Sculptor investment model has always been about flexibility. It's always been about unconstrained capital, so that our global team with expertise across all different types of assets and investment styles can wait for dislocations to emerge in a given area and then quickly mobilize capital, wait for what falls between the cracks, wait for the opportunities to arise where the capital hasn't been formed or where the capital that has been formed has gone away. And so in times of heightened volatility, in heightened uncertainty, in global dislocation, that's where this skill set of being able to look for what's falling through the cracks becomes most important.